The Dow tumbled nearly 700 points on Friday. Strong jobs report boosted the case for the Fed to hit the pause on a January rate cut. Joining us now is Tom Lee, FundStrat Capital CIO, head of research. He's a CNBC contributor. And I referenced you earlier, because I do remember you sort of being positive overall about the market and for this year, but with some trepidation near term. And most of your calls recently have been less on the strength of the economy and more on inflation data. And some of your, like when you were calling things, S&P is going to end the week, 8% higher because of inflation or something. So we got inflation this week. There are concerns. I think I tie a lot of the weakness in the market to that. Are these important numbers?
It's important because, as you know, we've been correcting now for almost a month, right? 23 trading days. And this Wednesday is an important day because it is a possible turning point for markets. And I would like to see CPI come in below, 0.25 or so. And I think that would give that jolt of confidence for markets, on top of, I think, earnings, which is going to be a positive catalyst. But for investors in the near term, I think they got to ride out the volatility, because I think yields here have made people nervous. Not necessarily deteriorate the long-term outlook, but near term.
Are they smart, the yields, or are they not giving us a correct signal? Because you sound really like you're not sure about the inflation data this week.
I'll have a better sense over the next couple of days as we sort of finalize what our expectations are. But the only hesitation we have is that the hurricanes last year have muddled some of the inflation quality, because, for instance, hotel reservations would go up because of these natural disasters. And it's going to happen now with the LA fires. And I think it's going to muddle used car prices as well, because you have to replace all these used cars.
So you think if they weren't muddled, that inflation isn't that big of a concern? And when you say a turning point in the markets, if we've been down for a month, turning point doesn't mean further weakness. You think we might be making a bottom this week?
Yes, our technician Mark Newton thinks 5,700 might be the turning point. It could happen Wednesday, so maybe 2% down from here. But that's really where the market could make a stand. I think if we could lift the cloud of some of this muddling. In fact, Waller last week even said most of the inflation last year was about imputed prices, meaning the real price of inflation was actually much lower. I think that is still the case. Inflation is weaker when you look at housing, et cetera. So once we can get through that noise. But investors, I think, shouldn't be too glum. I think earnings season is going to be something that really solidifies. Look, if S&P earnings growth is 10%, X energy, and revenue growth 5%, that's a really good reason to be owning equities.
Tom Lee has delivered a jaw-dropping forecast for Bitcoin's future. The digital currency, which has seen its fair share of ups and downs, could potentially skyrocket to a staggering 250,000 by the end of 2025. While this bold prediction is making headlines, there's more beneath the surface to uncover. As Lee discusses potential short-term volatility, he paints a picture of a vibrant landscape for Bitcoin investors.
Right now, with their rate, I don't care whether they, that's not what I base what the market's going to do on. Are people still just dying for another couple of cuts, or I think we're lucky to have gotten what we've already gotten. We got to live with that and just try and hope inflation doesn't come back.
I agree with you. I think the best case this year would be the Fed doing one cut because the economy is strong enough and they're still dovish, meaning they're going to make their way to neutral. But if they push those rate cuts into 2026, 2027, that's a longer run rate to support markets. Part of, I think, the hesitation for stocks right now is we have a new administration starting.
What? Oh, that's right.
Yes. And, we essentially reversed that rally from November, because we rallied 7% over 23 trading days. Mm-hmm. And now we've given up 5%, and another 2% would just round trip us back to November.
23 trading days.
Do you think stocks look expensive here or not? I mean, we've come back down, as you mentioned, but people keep talking about the PE ratio and how it's historically at the high end of things. Do you think it's expensive, or do you think we have the earnings power to support all of that?
To me, the 10-year, even if it gets to 5%, is a 20 PE multiple on a 10-year bond. Mm-hmm. The median PE on the S&P is 17 times. So I think stocks are giving you much better value than a bond right now. And 5% is probably not the level that yields stay at. It's probably a deflection point.
Tom, what does the movement in Bitcoin say to you? So we're at 91,000. What is that? What is that a signal or a sign of anything in this sort of analysis?
Stupid Fed.
Yeah.
It's not cutting.
Yeah, Bitcoin's down roughly 15% from its highs, which for a hypervolatile asset is a pretty normal correction. And it is slightly following global liquidity, but we're pretty early in this halving cycle. So to me, I think Bitcoin in the near term, again, our technician thinks 70,000 is where we can sort of make a stand. Means you're getting a big opportunity because I think Bitcoin's going to be one of the best performing assets.
So hold on, but you still think it goes all the way down to 70,000, or you think that's the floor, in which case you would still buy at this price?
Yeah, so there's Fibonacci's. So one level would be 70.
Let's say that again.
There's retracement levels. So
Yes.
You pull back from where you rallied.
Right.
So 70 is one level. It could go to as low as the 50s. But that's, again, not a new level. It's just where it touches and before it begins to rally.
Okay, let me ask you a different question. For those folks who are watching who are not in Bitcoin or are thinking about buying Bitcoin at these prices, are you saying that this is a fair and good price to get in, or are you saying wait because you think it's going farther down?
You know, Bitcoin is something you need to be long-term focused. I don't think anyone's going to lose money buying here at 90. If they're trying to time this, maybe they'll get lucky and it goes to 70. But to me, Bitcoin could be significantly higher this year, you know, maybe 200, 250. So I think 90 is still a good entry point.
Tom Lee's assertion that Bitcoin could escalate to between 200,000 and 250,000 by the end of 2025 has added a layer of excitement to financial circles. But why is Lee so optimistic about Bitcoin's long-term valuation? The digital currency, currently trading around 98,000, has witnessed a 2% rise, yet it remains below the highs of December. Despite a 15% decrease from its peak, Lee reassures that such fluctuations are typical for a volatile asset like Bitcoin. Lee deftly points to critical support levels, flagging 70,000 as a pivotal threshold. If Bitcoin dips below this mark, it might test the waters near 50,000. Nevertheless, Lee's confidence is unshaken.
Do you see any trouble there, or at least a moderation of the gains from recent years?
Well, I think it's understandable that technology could be consolidating some of the gains because the gains since October have been prodigious. I think it's been healthy because small caps, industrials, other sectors have started to lead. So I think it's a sign that the market is broadening. So I don't think technology valuations are at a bubble. I actually just think it's been healthy.
Really? So that is the half empty, half full viewpoint that either one that we've actually had people express earlier. Either, you know, the generals could come back down to the soldiers or they could broaden out and the advance could continue. So do you think that this election year, 2024, will gains be similar to 2023, or was that was pretty rare and unlikely to be repeated this year?
It's a question clients are asking us. The stock market seems a lot stronger this year than last year. We've had 4 consecutive months of gains, which Mark Newton, our head of technical strategy, says is very rare. We already had a pretty nice January, a very strong February. To me, if the market gains 20% this year, which would match what it did in 2023, it wouldn't surprise me. But I think the character would be very different, that it would be a lot more sectors participating in. You know, in some ways, I think if we are up 20% this year, I think small caps could be up a lot more, as much as 50%.
So we're not going to have a down year. That you're taking off the table, or what is it that would have to happen to throw this, you know, your somewhat bullish or pretty bullish forecast in jeopardy? What would have to happen?
I think 2 things would probably derail an equity move of 20% this year, you know, something even pushing the markets down. One would be if inflation reasserts itself in a way that the Fed has to reverse its action and become quite hawkish again. I think that would terrify markets. The second is if monetary policy is so restrictive now that we slip into a recession. I don't think we're losing that much economic momentum, but either would be negative for stocks.
Data underscores Lee's conviction. Bitcoin's adoption is steadily expanding, supported by increasing institutional interest and its role as a hedge against inflation. Meanwhile, the narrative woven by Lee hinges on Bitcoin's resilient nature and historical performance. Over the years, despite dips and corrections, Bitcoin's trajectory seems upward.
When Bitcoin was 4,000, it came down from 20,000, and you used to come on and say, yeah, by the end of the year, it's going back to 20,000. I don't know how you feel confident doing those things. Now you've done it again, really, and with the, I don't know, what did you say by the end of next year? Where could it be in your view?
Well, I think that sometime in the next 12, 18 months, Bitcoin can be over 150,000. But that's because, the backdrop for Bitcoin is so much more favorable today. We've got more visible demand from the spot ETF. And we know the supply dynamic is improving with the halving coming up, which is less than a month away. It does help that the Fed is becoming dovish. I mean, that's easier monetary policy. And I think from a regulatory perspective, we had so many hammers dropped in the last 12 months, really 18 months, that unless it's going to be worse over the next 2 years, Bitcoin's already faced sort of the peak of regulatory backlash.
And it got through the old highs. We had a true Bitcoin bull on earlier saying that in previous instances where it has reached a new high, that it doubles fairly quickly after that. I mean, he said 18 days. The minute it hit a new high, it sold off almost $10,000 to 59, but it's back to 67 today. How long before it doubles again? I mean, could you see that in the near term, another doubling?
I mean, near term, it's hard to know near term. Joe, I know our digital strategist, Sean Farrell, said that it's typical to consolidate after making a new high. So he thinks for the next 9 or 10 days, we're going to be maybe chopping around here. But we saw it with the spot Bitcoin ETF inflows, like, BlackRock seeing almost 800 million in inflows. So I think as long as there's strong spot demand and there aren't eager sellers, you do have a market that's out of balance, that there's too much demand for Bitcoin, not enough supply created through the block reward.
To wrap it up, Lee's forecast shines a spotlight on Bitcoin as a potentially rewarding investment. As it stands around 98,000, this might just be the golden opportunity for those eager to dive into the crypto realm. Lee's prediction serves as a springboard for investor enthusiasm, with Bitcoin poised as one of 2025's standout assets. But do you see Bitcoin as the beacon of 2025, or are the risks too steep? Don't forget to like and subscribe, and let's keep this bull run going.